As interest rates continue to drop in Europe, this is something we are seeing in central bank rates in multiple countries, and we are seeing it in swap rates for both the UK, the Eurozone, and Sweden. As interest rates continue to drop, consumer spending should recover. This should benefit a multitude of industries that have been weak in recent years, such as housing and industrial markets. I believe this will benefit the European economy. Thank you for the question. The long-term economic impacts of the Trump administration remain challenging to predict. But I think in the short term, the volatile policy announcements are likely to benefit more nimble entrepreneurial companies on a relative basis. Some examples of these could be AQ Group in Sweden, which is a small contract manufacturer. It could be Hiscox in the UK, which is a small specialty insurance company, or it could be Interpump in Italy, which is an industrial conglomerate. The other point I would make is if the Trump administration achieves a resolution to the Russia-Ukraine war, we could see increased construction activity across Europe and potentially lower energy costs. This would benefit multiple industries. Thank you. Based on manufacturing PMIs and conversations with multiple management teams across Europe, the industrial economy has clearly been weak for about 2.5 years. Looking into the future, visibility is always limited, but we have started to see signs of improvement in multiple countries. The most clear examples is PMIs, which have started to improve from a very weak point. The second one I would highlight is improving housing demand indicators. This includes higher purchasing volumes in markets like Sweden and the UK and higher purchasing inquiries. The third category I would mention is we are seeing major defense and/or infrastructure bills across multiple countries, such as Germany. This all signals an improvement from a weak point, in my view. Thank you. What I enjoy about Europe is it contains a wide range of companies and in countries with different business cultures and political backdrops. And that provides a great setup for active stock picking. Some examples of this could be an abundance of high quality industrial companies in the Nordics, very good specialty insurance and home insurance and automotive insurance in the UK, and various other companies throughout the continent. As an industrials analyst, I'm excited by the opportunity to pick out long-term winners at cyclically weak points like we have seen in the last few years. Thank you. So to pick up on the theme of nimble and entrepreneurial companies that can benefit and respond to this changing policy environment, one good example that FLPS team has been a long-term owner of is the Swedish company AQ Group. This is a contract manufacturer with a strong focus on adding value to demanding customers such as large trucking companies and electrical equipment manufacturers. And this has resulted in fantastic growth in profits and share price over the last 20 years. Picking up on the cyclically weak point, the FLPS team owns the German company Jost Werke. They make critical parts for trucks, trailers, and agricultural equipment, which have seen their business impacted from a weak economic environment in the recent years. Despite leading market positions and above average historical returns on capital, this company has traded at a notable discount to the wider European markets. Thank you.